Hey everyone, welcome back to Yuri's Box. In this video, I'll be talking about Bitcoin and the altcoin market. If you like this kind of content, consider leaving a like and subscribing to the channel. And as usual, nothing in this video is financial advice. So, in case you don't know the channel, I started my investment career journey, if you will, in Bitcoin and the altcoin market. I mainly talk about bonds and definitely more boring stuff than the altcoins. But I talk about bonds, the dollar, Federal Reserve. I've definitely moved on from cryptocurrencies, but in general, this is where I started. All right, so I can give you a couple of names where I started off in the market back in 2021. Orion was one I followed quite closely. Dogecoin, as cliche as that sounds, is actually one of the first ones I looked at because I remember Elon Musk tweeting about that in January of 2021. I remember ADA, Cardano, looking at that. Elrond was another one I remember looking at. What was that? eGold, USDT. All right. I remember quite a few of these projects. Chainlink. This is just me going down memory lane at this point. But regardless, to me, every time I go and look at the cryptocurrency space, it's kind of like a return home. It's kind of like me paying homage to again to where I started. All right, it's like revisiting my first training ground, if you will. So again, today I'll mainly be talking about Bitcoin and what Bitcoin and the altcoin market and what my thoughts are. And again, in general, the best way to go about Bitcoin is to assume that prices will go up over time. Full stop. All right. As Mike Alfred says on X and YouTube many times, the kid analysts that like to squeal on charts are no match for, the price action in Bitcoin. Usually, Bitcoin is stronger than other people's opinions. And that is, generally speaking, the best way to go about Bitcoin. DCA, buy over a stretch of time, so you can really just try to mitigate the volatility of the asset class because, let's face it, it's a volatile class. And again, generally assume that it'll go up and assume that any dip is a buying opportunity. All right, that's, again, not financial advice, of course, but it is usually the safest approach to Bitcoin. Having said that, if you want to get into more of the, more timing parts of it, this is where I could offer some insight potentially. And again, last time I made a video was right here, and I've been consistent in pointing the finger at the 2019 part of the cycle because, in my opinion, there are quite a few similarities with this move right here that we saw in 2019. Okay, from the bottom to this peak right here to the move lower and the breakout, and then I'll stop right there because we still haven't progressed after that. So what do I mean by all of this? Well, if you look at 2019 from the bottom, we went up about 330, depending on how precise you are with your measurements. You could say that right here it's 340, 350, 330, more or less. You get the picture of the kind of move we had. If you go and look at today's cycle from the low, we're about 360, 370. Again, sounds familiar. What followed that was about what was this right here? Depending on the low that you pick and the high that you pick, about a 30, 35%. All right, that's looking at the peak right here, the wick, and 35% decline. And if you look at the peak to this low right here, about a 50% decrease. Again, it's not exactly similar, but it's exactly the same rather, but there are some similarities. Where it gets kind of funky is right here, because from this low, we break out and we go up about 60%. From this low right here to this high, it's about 120%, exactly double the returns that we saw in this move right here. Now, there's a lot of speculation that you can that you can do about this sort of move and why we saw double. I mean, potentially you could say that this move would have been even more dramatic had it not been for COVID. All right, this came in February of 2020, and that was exactly the beginning of the the COVID drama. So, but that's really not here nor there. So let's just take it as it is. Regardless, after this move right here, we had the tariff drama. And after that, we've kind of deviated, if you will. All right, we've kind of gone back up. And personally, I'm still looking at 2019 as, kind of my base case, if you will, because of everything that we know about, the state of the labor market and everything that I talk about in my previous videos. Also considering that if you follow this sort of stuff, we're nearing the end of the 4-year cycle. All right, we're starting to get close to that point where most of the returns are probably in for this cycle. Now, it doesn't mean it can't go up to 150, 160, absolutely not. But generally speaking, when you get to the summer of the what is this? The election year, the basically the equivalent of 2022. It is prudent at the very least to start lowering expectations. Okay. Also, because there is another thing that is kind of bugging me here, and you can see it in the RSI. I'll actually put it as a full line. Is that each subsequent peak has had a lower RSI read. All right, we were up here around a read of 86, 88. This other peak right here saw us at 78. This peak right here saw us at 67. And it is a similar dynamic that we saw in 2021, where again, we had the first significant peak in 2021, January 2021, RSI read of 94. The subsequent peak saw an RSI of 67, and the last peak saw an RSI of 68. All right, so not great when contextualizing everything. But again, I'm not invested in Bitcoin at this part of the cycle specifically because again, I just focus more a bit on the macro. Now again, just because the economy is slowing, as I always say, it doesn't mean that you should go out on short Bitcoin and stocks. That's definitely not that's definitely not how things work. But again, I can't help but I'm not going to get all walled up at this point of the cycle is what I'm trying to say, okay? So this is something to keep in mind with this divergence that we've been having on the RSI. Could it definitely blast through? Potentially, why not? But again, if you ask me, I would start kind of dialing back at this point of the cycle my expectations, what I'm trying to say. And again, the 2019 cycle to me offers some insight at the very least of what we might see. All right. Meaning, yes, this part of the cycle has been somewhat similar. What has been different is, potentially this part right here. We could argue that this wick could be the equivalent of, this retrace up. But again, it's, kind of dubious speculation as to where Benjamin Cowan would say. And again, if, the best place to get your insights on cryptocurrencies is again Benjamin Cowan. I follow him. You should follow him. I have his profile linked in my bio underneath each video. So definitely look at him. He knows definitely more than I ever will. But regardless, as far as huge investments are concerned in Bitcoin, I would generally be cautious. Everything I speak about on my channel about the economic cycle and yada yada yada. But in the long term, I have absolutely no problem with, adding Bitcoin. All right. Again, Bitcoin goes up. That's what it does. All right. So defer to what I said in the beginning of the video. Treat each, decline as a buying opportunity. But just keep in mind that it's probably best if you consider each buy for the very, very long term and not for something that, if price goes down, you're going to, tear your hair out is what I'm saying. All right. So again, I love Bitcoin. I like gold. I like hard assets in general. I don't have any beef in particular with Bitcoin, if not the fact that, of where we are really and what I see on the charts. Again, my personal bias is looking at 2019. So again, that's really it for Bitcoin. Where I tend to get a little bit more, on the harsh side is altcoins, because I personally don't really have anything, personal against altcoins and the altcoin market. It's just that I think that altcoins have a time and a place. And I think that this is neither the time or the place for altcoins. And there are a few things that can be said about altcoins. Again, my base case is that this is kind of a repeat and, with its own differences of 2019. And if you go and look at what happened in 2019 in the altcoin market, it is similar. Again, not the same, but similar. In 2018 and 2019, we saw kind of a sideways chop with every time that we tried to go up in the altcoin market, we just got slammed back down. All right. And if you look today, every time we try to go up, we get slammed back down, up and down. Then we go down and we go up and up, we got slammed back down. All right. What's even more similar is that this sideways chop was followed by comes after this steep decline. All right, which could be this steep decline right here in 2018. And again, the argument here is that this is kind of a stretched out version of this entire move right here. Okay. And so that is something to consider. Something else is to consider is that we are currently in quantitative tightening mode. Now, again, there are a lot of things that can be said of quantitative tightening. You can say that, we've had a huge fiscal impulse, with Biden spending, to high hell. But just to keep things, simple here, we are in a quantitative tightening mode. And whenever we are in a quantitative tightening mode, altcoins tend to suffer. It's what we saw in 2018 and 2019. Altcoins didn't bottom until we started seeing quantitative tightening move away and quantitative easing getting introduced. And again, that is when altcoins started to perform quite well, especially when we had QE galore, zero interest rates, ZERP, and all that good stuff. That's when altcoins started to benefit quite a bit. But until then, altcoins suffered. And it is a similar mechanic that you can point to also in the equity space and stocks where, so far, this is, again, quantitative tightening bull market, where the stocks that have benefited so far are really the big stocks, the Mag 7, the winners, the biggest of the space, so your Nvidia, your Meta, your Amazon, Tesla, to a certain extent. Who else am I forgetting here? I forget, but regardless, you get the picture. And if you look at something like the Russell 2000, kind of draw a parallel between the Russell 2000, small caps, and the altcoin market, this has been a quantitative tightening environment, and small caps have done nothing for the past 5 years. All right, we're halfway a lost decade, if you will, in small caps. So again, in a quantitative tightening bull market, what you see is the best of the asset class move up and the rest kind of faltering. All right, so Bitcoin moves up, it does its thing, but altcoins kind of, suffer. Stocks, the best of the class, go up, but kind of the mid to low range stocks don't really, have much steam in them. Again, you can look at, when quantitative easing started to get reintroduced, we started to move up, we had that crash, and then we had that explosive move up. Similar to what we saw, in fact, in the altcoin market. Quantitative easing comes into the market, we start to move up, that crash, and then we explode higher. All right, so that is something to consider. Now, the outlook, having said all of this, you can probably extrapolate that I'm not too optimistic on the altcoin market. And there are two ways really you can interpret this. Is that you can say that that altcoins are oscillators. All right, you can say that we go from 1 to to the 2.0025 range. And right here, we either we top at around 1 and we bottom at around 0.25. All right. This is the optimistic take, right? And you say that overall throughout the cycle, if you look right here in 2017, again in 2017, 2019, and 2019, 2019, 2020, 2021 to some extent, altcoins like to bottom at the 0.25 range, right? That is one outcome. That is one way of looking at things. Personally, I'm not of this idea, and I take the pessimistic view, and that is that in the long term, you are better off sticking with Bitcoin. Altcoins have a time and a place, and that time and place is when we have QE galore, ZERP, and just central banks panicking because something bad happened. And so you have this huge wave of liquidity that comes into the market and eventually finds its way to even the low end of the market caps, if you will. All right. So the pessimistic view would be that they aren't oscillators and they just have diminishing returns against Bitcoin. And so the pessimistic way of looking at things is to paint this downward trending parallel channel. And the implications of this, of course, is that instead of having just a little bit more to go before we bottom, potentially just another 20%, potentially we have another 70% to go on altcoins. All right, now I understand it's quite unpopular. I understand that altcoins have huge communities, and the network effect is quite strong. But regardless, that's my opinion, and that's the way I tend to look at things. Overall, the best way to go about cryptocurrencies is stick with Bitcoin. If you really want to go take a little bit extra risk, go with Ethereum. But if you really want to go with altcoins, you better be sure you have central banks behind your back and acting as a tailwind and not as a headwind. And if this indeed is true, again, this parallel channel is the correct way of looking at things, we still have quite a fair way to go down. All right. Right here, around the bottom potentially could be anywhere between 0.07 and 0.05, if you will, depending on when we reach that bottom. All right. Now, this doesn't have to happen. I could easily be wrong, and we eventually just bottom at 0.25 because perhaps they cut too soon. Perhaps the Fed, in July cuts to zero and we have QE. Again, if you've been following this channel, you'll know that I'm quite skeptical of that, simply because for all the talk that the Federal Reserve will prefer really defending growth over inflation, history shows that when we usually get into the last part of the cycle, there are certain dynamics that don't allow the Fed to cut as much as they should, and so they're usually late. And that kind of leads into the theme that central banks aren't really proactive; they're reactive. They react to whatever it is that is smacking them in the face. The best example that I give in this in my channel really is looking at inflation, not crypto. Right here, all right. And in 2008, we were on the uptrend on inflation, all right. And in July of 2008, probably one of the worst times for inflation, for a recession, because when we were right smack in the middle and in the brewing of the recession, we had inflation at 5.6%, and lo and behold, we had a lot of people calling for rate hikes. Right, and the Fed was also talking about tighter monetary policy, trying to defend the dollar against supporting a stronger dollar. All right, so this really doesn't bode well for anybody that is really hoping for rate cuts and QE and all that good stuff. That will come. Don't get me wrong. I'm not arguing against that. That will come, but it will come after something bad has happened. that will come when central banks are panicking. All right. So do consider that. And if you consider that, and you consider the fact that we are already at 0.32 on the altcoin chart, we still don't really see central banks panicking, because they're really not getting smacked in the face by growth collapsing. Altcoins are already on the downtrend. To me, that just makes for quite a dramatic, decline to new lows for the altcoin market. Now, again, could the 0.25 range be the bottom? Absolutely. All right, and it's just me being too pessimistic on altcoins. But again, given everything we know, everything I talk about on my channel, I don't think either way, regardless if we bottom at 0.25 or lower, that this is the time to be piling into altcoins. Could you trade them? Absolutely. But I would not be taking on that much risk in this part of the cycle. Again, if you want to play cryptos, the best way to do it is buy Bitcoin. DCA into Bitcoin. And again, go for the long term. All right. Hopefully you enjoyed this video. If you like it, leave a like, subscribe to the channel, and I'll see you next time.